Hi, my name is Brandon Geisler, and I'm the portfolio manager for the Alger mid-cap growth strategy. There's no doubt AI is very disruptive, and it is obviously present in our portfolios here at Alger. There are going to be businesses that can really harness the power of AI and drive disproportional results in our view. More recently, people have been talking about this as the HALO concept, heavy asset, low obsolescence. These are businesses that tend to have regulatory barriers to entry, have a lot of physical assets, but have unique characteristics, and from our perspective, they present very interesting opportunities to populate a portfolio today. We think RBC is a great example of a business that could be qualified under a HALO company. They make effectively highly engineered bearings, gearing, and motion control systems for the aerospace industry, for the defense industry, and for industrial applications. What makes it so unique in our view is that there's a lot of IP in coatings and producing products that can really work in these harsh environments, and so the qualification process to be a participant in one of these products is very long. Because of that, there's natural barriers to entry for an upstart to get involved. And so in our view, it's a business that can actually take advantage of AI to enhance its innovation, its production line, and actually, we believe, continue to drive the business forward. Another example is GFL. GFL couldn't be more different than RBC. One is in the aerospace industries and GFL is in the waste business. What I think makes it somewhat similar, though, is some of those underlying characteristics we were talking about earlier. In the case of GFL, it's actually things like landfills. Those are assets that are very difficult to get permitted. There is a unique structure of that industry that allows them, in our view, to take advantage of AI to actually improve things like route density, to think about things like recycling facilities and running their landfills more efficiently. Another business that we're looking at right now is Viking Cruises. I think what's really interesting is there's a major demographic wave that's evolving right now in the United States. If you look at the 55-year-old plus population group, they're growing mid to high single digits every year versus the overall population barely growing here. And what's interesting is they control 75% of the net worth of the U.S. economy, so roughly $110 trillion. So if you take those tenants and you look at how they're spending their money, we believe they're looking for experiential travel. What makes Viking unique, in our view, is it really focuses on the 55-year-old demographic. And if you look at their core business, it's actually river cruises across Europe. And they control, I think, 89 unique docking locations on those rivers, which really gives them a disproportionate advantage to new competition in our view. I think the demographic trends are immutable. We believe it's going to be happening for the next several decades. And so when we have moments like this, where we have events in the Middle East that are impacting oil prices and jet fuel prices and travel, I tend to think of these things as opportunities, because when you have a secular trend like that demographic wave with this affluent customer, we believe it's a matter of a when, not if. I think it's a great time to be looking at the mid-cap space. On the one hand, we get to directly invest in some of the technology providers of AI. But on the other, we get to find businesses like GFL and RBC and Viking that we believe can really harness the power of AI and take advantage of their inherent business characteristics, their physical presence, their regulatory framework, the qualification frameworks that, in our view, really allow them to take advantage, drive their businesses forward, and I think the opportunity in the mid-cap space is exciting.